This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis, semiconductors, treasuries, and gold for the week of October 6th, 2025. And with that said, let's go ahead and jump straight into the data. I will be changing up how the videos look from now on. Now, this isn't how I want to set up the datasets. This is just temporary, but expect some changes in the videos over the next week and a half, very likely, as I do want to make it a little easier to follow along. Now, with that said, Monday, we don't have any major data. There might be some minor treasury auctions, but again, nothing major. On Tuesday, the 8:30 a.m. time slot's really important. We have the export and import data. We also have the trade balances. Now, the trade balances isn't such a big deal, but the exports and imports are. The reason why is export and import data is plugged into the GDP calculator or the formula, and it will tell you basically exactly where the GDP is going up or down. And besides the last print, the GDP has really been having a tough time. So that type of data is very, very key. It does help towards the bigger picture. Now at 10, between 10 a.m. and 11:30 a.m., there's multiple Fed speakers. We have Fed member Bostic, member Bowman, member Kashkari, all speaking about different things. Now, again, kind of like any Fed speech, it doesn't really matter unless they say something very important. You'll know if it's important or not because the Treasury yields will react either positively or negatively to something very, very important. Now, at 11 a.m., there is the New York Fed 1-year consumer inflation expectations. They don't show a forecast amount. I expect those to be down. I know that a lot of retailers have been saying in their earnings lately that they really expect this winter season to be slow, and along with the hiring, they have not been hiring many, the seasonal positions just across the board. So I'm really not expecting some of these consumer numbers to be good at all. Now, with that said, there is the 3-year note auction at 1 p.m. Kind of expecting that to start pulling back down again. I talked about when the rate cuts usually start, how there's always this short period where the interest rate, or not the interest rates, but just the treasury yields themselves start to rise for a small period of time. Now, that time can last from anywhere for a few weeks to, 1 to 3 months. So potentially that time's starting to become over. The reason why I'm saying that is because last week kind of confirmed that the labor market is really starting to deteriorate. And that's not a good thing, but it is a good thing for, treasuries. It will pull the treasury yields down. It will help towards, influencing more rate cuts and deeper rate cuts. So anyway, that's for Tuesday. Now for Wednesday, let's see. I don't think it was a very big day. We have Fed member Barr speaking at 9:30 a.m. He usually doesn't say anything super important. We have the 10-year Treasury auction at 1 p.m. Now that will be important, and I'm pretty much across the board expecting Treasuries to just start pulling down in terms of the actual yields. So currently the last 10-year Treasury was at a midline of 4.033%. I'm expecting it to pull down to probably about 3.88-ish percent, give or take. The higher end of the 3.8, lower end of the 3.9, and I don't think that's going to be an absurd expectation at all. Now at 3 p.m. we have the FOMC meeting minutes and that's from last FOMC. And again, we have member Kashkari speaking 15 minutes after that. But this uh, you know, Fed minutes will be pretty important just because we have a new Fed member. Fed member, I think his name is Stephen Moran. Hope I got his first name right. If not, I'll have to get that corrected eventually. But Fed member Moran, he's pretty much completely opposite end of the spectrum. He was very likely the person on the dot plot who had his had his dot all the way down below 2%, I believe, by the end of this year. So, yeah, he's definitely extremely dovish, and it will be interesting to read what he had to say in his FOMC meeting minutes. And I think a lot of the market is actually going to get a kick out of reading it, whether, it becomes bullish or bearish, right? Now, for Thursday, between Thursday and Friday, by the way, this week are the really big days. Now, for Thursday at 8:30 a.m., we have the jobless claims. Again, that's just a weekly, result. There has been a mix between people assuming that the jobless claims and everything is going up or down. They have been in an upward trend. There has been a few reports that have been, not as strong in the uptrend, but I do expect this, absolutely to start pulling up towards that 2 million mark, which I've discussed before. That's not a good thing for the economy. That suggests that a lot of people are out of jobs. Now, at the same time, 8:30, we have Fed member Powell, or Fed Chair Powell speaking. Uh, Anytime Powell speaks right now is super important. So, that's pretty self-explanatory. It'll be interesting to hear what he has to say. At 1 p.m., we have the 30-year bond auction, and that's going to move very likely, very heavily based on what Powell says. If Powell is dovish across the board, meaning he, is towards the path of rate cuts, then very likely the 30-year will come down pretty substantially. Now, by substantially, I expect it to be probably about 4.58%, give or take. So take with that for what it is, but I do expect that to come down quite a bit. Now, what else? Sorry, I'm trying to read this. I'm very blind. There is Fed member Barr speaking. I don't really care about that. Fed member Bowman speaks when the market's already closed, so that doesn't matter. Okay, so for Friday, this is the big day because this is when all the job data comes out. So we have the hourly earnings, we have the non-farm payrolls, we have the participation rate, we have the unemployment rate, and that all comes out at 8:30. So that's definitely going to move the market, guarantee you. Everybody is really focused on the job numbers right now. So if they come in weaker, and so far the expectation kind of sets that through the private non-farm payrolls at least, they're expecting the non-farm payrolls to pull up to 52,000. But even then, that would still be very low. Remember, this is usually up in the 80 to 100,000 range. So, and even then, that's still low. I believe it's actually closer to the 170,000 range. So, this is still expected to be a very weak print, even if it's a print heading upwards. Now, I'm on the other end of the coin. I do think that this print will be even weaker than this. I would be surprised if this doesn't even pull down to negative. Now, with that said, again, all that super key data is at 8:30. There will be a lot to go over at that time, so we'll discuss it more, as Friday rolls up. Now at 10 a.m., we have a lot of the Michigan inflation and consumer data. That's going to be very important. I don't think as important as the job data in the morning, but based on what the job data has to offer us, then the Michigan consumer and inflation data can be, um, you know, heavily interpreted completely different. So, that could be very important, or that could just be a big nothing burger. I do expect Friday to be quite a day, though. This is pretty much all the data sets that the big money is really looking at right now, and that's the labor market and what consumers are doing. I don't think that a lot of big money really cares about the inflation side. I really think that a lot of people are just really expecting um, consumers to struggle during these holiday months. So we'll see. Um, but yeah, that's the data for this week. So really kind of a busy week, even though there's not a whole lot of data. Again, nothing on Monday. Tuesday, the important time slots really the 8:30, and then basically essentially the whole day on Tuesday is going to be full of data. We have data at 8:30, 10, 11:30, 11, 1 p.m., 3 p.m. So yeah, the entire day. For Wednesday, it's basically at 1 p.m. and 3 p.m. Um, Thursday is basically 8:30 with Powell speaking and however long Powell is speaking. And then the 30-year Treasury auction will be very, very important as well. On Friday, it's again the 8:30 time slot and the 10 a.m. time slot. So yeah, that's the data for this week, and let's go ahead and discuss the earnings. Now, really not a whole lot of earnings this week. Really nothing to discuss. There's Pepsi and Tilray and stuff. That's it. So, no earnings I'm really looking forward to next or this week, but very likely the week after that. Let's see, we have a lot of banking earnings, BlackRock. Week after that, we start getting Tesla, Netflix. Yeah, so we're really not in the cusp of earnings seasons yet. It still has a whole nother, 2 to 3 weeks before we can really start being excited about earnings again. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, I'm going to be discussing everything kind of quickly, because I would rather focus on the hourly chart just to show structure more so. Yeah, I'm losing my train of thought, but we're going to be going over the SPY, semiconductors, treasuries, and then gold. Now, for Sundays, I'm going to be including the weekly data as well, so the weekly time frame included, and this will kind of tell a larger story of where the symbol is trading overall. But overall, I'm going to try to really turn these videos into something that's a little easier to watch, as I do want to really start working on a lot more learning content and everything. So anyway, with that said, we're going to quickly go over the daily numbers, and then we're going to go over the weekly numbers for SPY. So going to the daily time frame, turning on our moving averages and Bollinger Bands. Let's go over it. All right. So the market closed at 669.21. The 5 mile is currently at 667.35. It will very, very, very likely pull up towards the 669 on open. That means the upper bounds of the 5 mile on the daily time frame is basically going to be around that 671 range, with the lower bounds being at that 667-ish, give or take a little bit of cents here or there. Now, with that said, the overnight price is currently at 671.37, and we're going to discuss that a little bit more in just a few minutes here. But I want to discuss the 10 mile and the 20 mile first. Now, the 10 mile is at 664.78. That will be pulling up towards that 665, potentially even 666 towards the end of the week if we continue seeing bullish action. So we are still trading above the 10 mile, but we are starting to get a little bit closer to it. As you can see, zooming in, that it is consolidating a little bit, even though it's starting to pull apart. Yeah, you'll have to see in a couple days what I mean by the consolidation. Um, the 20 mile is at 660.19, so that's still quite a ways from the market. Currently, that's about a whole $12 away. So there's quite a bit of room from that 20 mile. Now the upper Bollinger is at 673.26. We did not secure an upper Bollinger move on Friday, and based on where the market is right now, seeing how we're technically already slightly above the upper bounds of the 5 mile, it's very, very, very likely we could get a move pushed into the upper Bollinger, and that would take us essentially, excuse me, all the way towards that 675, 678 range. You know, knowing how upper Bollinger moves work, the day one secures the level, meaning it closes at or above the actual upper Bollinger itself. Day two, we expect a higher high into downward consolidation. So with the upper Bollinger being at that 673.26 range, pulling up towards that 675, 678 is more than reasonable. Lower Bollinger I'm not going to really discuss. It's very, very far away. Now, I do want to quickly go over the weekly time frame. And the reason why is because the weekly time frame can kind of tell you a lot about a symbol as well. And I'm going to have to explain this a lot better in a different video, as the moving averages do work a little differently on the weekly time frame. But this is just helping you build a stronger thesis overall. So it is key data. It's something to pay attention to. So the 5 mile is currently at 659.15. So that means that that 659, 660 range is going to be very, very, very strong here. The 5 mile looks like it has been tested throughout the last 3 to 4 weeks now on the weekly time frame. So that's well within the testing period. You have to remember on the weekly time frame, the 5 mile will be tested over 5 weeks, 10 mile will be tested over 10 weeks, 20 mile tested over 20 weeks, etc., etc. So, with that said, the 5 mile is at that 659.15, basically really putting a major support at that 660 range. Okay, so if you're bullish, the upside is strong, but you have to be a little careful here, okay? And the reason why is because the upper Bollinger is at that 681.93. Now, this does kind of work like the daily time frame upper Bollinger moves, but it is extremely, extremely rare to see it work in terms of having like the week 1 high, week 2 higher high type of ordeal. That's very, very rare. It's very likely we will skirt towards the level, maybe even see a candle pull above it slightly, but I really don't expect it to run above the upper Bollinger. It's as I said, it's an extreme, extreme, extreme rare thing on the weekly chart. It's not something you should really have expectations around. Now, with that said, that does mean that the bullish upside should have a little bit of caution put towards it. You know, it's not saying that the market can't run towards that 681, 682, potentially even 683 price here, but you just have to be really careful as the upside is really starting to taper here in terms of the weekly chart. Now, one thing that I really want you to focus on in terms of the weekly time frame is the 50 MA. Uh, that's a super, super, super strong support when it's on the weekly time frame. Um, that is all the way up to the 600 range. So if anyone is expecting some absurd crash to occur, it's very, very unreasonable at this point. Getting even below that 590 range would be extremely difficult with that 50 MA being pulled so high. And just to kind of correlate that on the daily time frame, the bottom Bollinger is all the way at the 572. So if we pulled down to that 590 range, we'd be near the bottom Bollinger, but it would actually pull upward towards us quite a bit. So yeah, I hope you can understand what I'm saying with that. Now, the ADL, let me see if I have it shown in the video. I don't. I will edit that sometime, not for this video, but for another one. The ADL on the daily time frame has been moving upward overall in the trend, but the last few days have been tapering down, so just be aware that potentially that could be another one of these upper Bollinger rejections. And I talked about this, I want to say 2 or 3 weeks ago, but there's a very, very dangerous range between the upper Bollinger and the 5 mile where the market price can hover between that and then basically dump down if it sees a major rejection. So if that occurs, then that's kind of what that is. It's a very, very weird and unique move. It does occur sometimes. It's what we were looking at right before the major correction happened, essentially. Now, with that said, let's go ahead and turn off the moving averages and the Bollinger Bands. And I want to show the drawings because I have redone some of the charts. So this is the weekly time frame, and you know, this is showing the old really major channel. This is that old yellow super buying channel that's been around forever, basically. We did have to extend it slightly, so it is now holding weight since basically the very, very beginning of 2018 now. So that's a little interesting. It does mean that there is still some upside in it. And again, this is the weekly time frame, so these candles will pull in or out of these channels slightly. But just correlating that to the daily time frame, it's showing that we are nearing the upper side of this major buying channel. However, I did redo one of the major channels from this rally, and what's surprising is that technically we're very, very close to the bottom of this channel. Now, with being close to the bottom of this channel, that means that the upside here is massive. If we don't break through the channel, basically how this works is when you're at the bottom of a channel, all this area is when you buy calls. Okay, and the reason why that area is when you buy calls because all the calls from the bottom of that channel all get taken up towards the top of the channel. Okay, and that's generally how channel trading works. As you can see in the yellow channel, it is a longer term channel, so it will have more depth to it in terms of the upside and downside, but it works to aim to trade to the upside to the downside. That's just simply how these channels work. Now, with that said, if we don't see a bounce here, if we see a rejection through this channel, then that becomes extremely, extremely bearish. Now, that doesn't mean that the channel is fully breaking. That just might mean that the channel is expanding to the downside. So don't really have a whole ton of fear here if you see some selling and you see this channel expand. I think it's very, very reasonable for that to expand, as we really haven't even seen a selling day over 3%, I believe over 90 trading sessions now, which is up there in terms of the record days of, or record rallies anyway. I think one of the highest ones was 150 something days. I'll have to find out the exact amounts, but it's interesting to think about. Now, going over the hourly very, very quickly, because there's a lot I want to cover still. Now, you can follow on the hourly. I'm going to take a look at the 4-hour chart. Now, looking at actual just structure here, we see a lot of bull structure, okay? And I know a lot of bears are going to be angry at me for that, but let's just face reality. Now, there is a lot of bull structure here. We have this very nice and completed inverse head and shoulders. From that head and shoulders, or inverse head and shoulders, we completed a very nice bullish cup. From that bullish cup, we have now worked on a handle. And it doesn't look like a handle, but that is a double bottom there. I'm going to try to highlight this, but I apologize if it doesn't show very well, as there are just a lot of different colors and things going on here. I will try to highlight these with orange, and I apologize for my colorblind viewers. Now, that double bottom is a bullish structure, okay? So what that's telling us very, very, very likely is that that upper Bollinger move is probably going to happen, okay, as this is very likely a bullish structure. Now, if this starts selling, however, and let's go ahead and just delete this cup. I'll show it just for a second if you want to take a screenshot or anything. And now I'm just going to delete it and show the bearish thesis here, which is the bears will start pressing against this channel, finish out this head and shoulders, because we do have a head formed. We do have the left shoulder formed, and technically all we need now is for the market to sell down, start working on that right shoulder, and sell down. Okay, and from there, we could see the 650 range very, very, very quickly. Now, again, the 20 MA is at 627 on the weekly time frame. I don't know why I said weekly. The 20 MA is at 660, 19 on the daily time frame. So this level would align very well with a 20 MA test. We did not have a 20 MA test the other time. We had that major sell just a few days ago. I want to say it was last Thursday or Friday. Not last, the week before last. But this is what bears are kind of looking for here. So if we continue rallying from here towards the upside and start finishing more bullish structure, then this head and shoulders will be invalidated. And from there, you just have to allow the upper Bollinger move to occur. And from the upper Bollinger move day 2, that's when you find a new short. So that's the SPY. Now, going into semiconductors, and I'm going to go over these just very, very, very quickly, okay? So for semiconductors, this is the daily time frame. And it doesn't show the ADL on your screen, but the ADL on my screen is just massive, okay? It's just a massive push to the upside. Basically, since that low in April, it's just been nothing but money pouring into this. Now, with that said, we have a lot of bull structure here. Okay, we have this now completed major bullish cup, and from that completed cup, kind of as always, we're looking for bearish structure to start forming up here, and from that, we're looking for a handle to form. However, seeing how this last, SPY rally has been, and seeing how A lot of these buying channels throughout SPY, semiconductors, and everything do have upside to them. We can potentially see this rally quite a bit further. If we follow the channel, potentially we can go all the way up to that 317-ish range, give or take. Which wouldn't surprise me if we invalidate that head and shoulders on SPY, it's extremely likely we will see uh, that type of move towards the upside. Now, I'm not going to go over the moving averages, but the Bollinger Bands, we did not have an upper Bollinger move, so there is still room for that upper Bollinger move. The 20 mAh is currently at 264, so a whole essentially $19 below us. Plenty of downside room if that head and shoulders again is invalidated, but so far the overnight's pushing 281, heading towards that 282 range. So we'll see the next 2 days. You'll know whether this is going to start pushing or heading down and pressing against that buying channel. And getting into treasuries, let's take a look at TLT really quick. Let me go ahead and turn off the drawings just for a moment. I'm going to turn off the Bollinger Bands, and I want to show the weekly time frame. As on the weekly time frame, I want to show, let's see. So TLT for a very, very long time, and there was this brief period during the sell-off last year when we had the oh gosh, I can't even remember the name. The trade thing that happened with Japan, the currency exchange thing. We saw TLT pull up very, very close to that $100 range. If I remember correctly, it pulled up towards 98, 99. But ever since then, TLT has been underneath the 50 mAh, and that's that golden line in the center there. Let me go ahead and actually just make that a little thicker if I can. I can't edit that right now. It's that golden line. Okay, and I know for my colorblind viewers, you can't really see that very well. But for the very first time in a very long time, we're starting to really push above the 50-day moving average on a weekly time frame. So that is starting to show that there is some bullishness to treasuries again, and that's expected. We're having rate cuts starting to happen. We're having the labor market really starting to see some deteriorating. There's a lot of upside to treasuries. Okay, and I do want to turn on the daily time frame just to kind of show that in a second. This is from the sell from, I guess it's buying, but this is when there was that treasury liquidity crisis in Japan. With the yen carry trade, that's what it's called. Now, with that said, with the rate cuts and everything, and with the labor market failing, it's extremely likely that all this bullish structure is going to take us right back up to that 97 range. Now, I can't tell you a time frame. That could be anywhere from, a few weeks to potentially months. Just looking at the calendar, it looks like, if we do continue to start continuing upward and not break this trend, then we should hit that range towards the November time frame. So I might actually start trying to take December TLT contracts for that. That might be a really good trade actually. Someone remind me about that if I forget. But that's very, very likely going to be a very, very strong trade here. Now, I do want to quickly go over gold, but I just wanted to make a mention that there's really no reason for treasuries to pull down. The only reason treasuries would pull down is besides the actual just trading of the treasury market itself, um, is if inflation was actually heading upward. But I think that myth is being dispelled. All the data sets are really starting to show us that, the labor market and everything isn't what it's being said to be. So, yeah, treasury's very, very bullish right now. And finally, I just wanted to quickly go over gold. Now, this is the weekly time frame. There's this massive, massive buying channel that gold has been in, and let's see where the Bollingers are. It has been pushing the upper Bollinger for quite a while now, so it would not be unreasonable to expect a slight pullback in gold. But I think the just economic conditions overall just kind of makes sense for this to keep pushing all the way up towards the top of that channel. And going over the daily time frame, I don't really expect anything different. Again, we can push into the upper Bollinger as we were not fully in the upper Bollinger on close. So there's still room on the upside for short-term bullishness too. But again, we have not tested the 20 MA for quite a while now, and gold is a symbol that really does like to test between the upper Bollinger, the 20 MA, and the lower Bollinger very, very often. And I know that this buying and everything has been super, super euphoric, but history does show that that is a trend. So just be cautious of that. Um, but overall, you're in a major buying channel. It's not showing very well in the daily time frame, but on the weekly time frame, you're in a major buying channel. There's a ton of upside. If you get any sort of pullback in gold, that's something you should definitely pick up. It's something I'll definitely be picking up myself. Even if it's just little, half ounces or whatever they are. Uh, doesn't matter. Even if I have to just buy the actual gold stock itself, and you can see how this bounced really well off that consolidation channel. And this is the actual gold symbol itself, GLD. So we were expecting a potential support test there that did not happen. It did break above our major buying channel as well, but I did not redraw the buying channel, but still a lot of upside to gold. I just think the main concern is that potentially we have not seen a pullback for quite a while, and that's kind of throughout a lot of different symbols right now, like SPY, not so much treasuries. Treasuries have been, up and down, but precious metals, semiconductors, tech, uh, they've just been absolutely flying, and we have not had a real serious support test at all. In all these past few weeks that should have been fairly bearish in terms of just giving us a support test have essentially done nothing. So, yeah, potentially you guys are still heading up quite a bit. I would not be surprised, especially seeing how the overnight is up. Currently a whole 1.2%, so you guys are already above the upper Bollinger right now. If you guys close above that on the day, then very, very likely Tuesday will give you a higher high, and from there you can work on doing a 5 mod test. But anyway, that's going to do it. Thank you for watching the video. I always appreciate everyone who watches and supports, or whether you like the video or not, doesn't matter. I appreciate it. Um, with that said, I'm going to be trying to uh, start implementing some changes into the videos and working on a bunch of different stuff. I wanted to do a lot more in this video, but I just ran out of time, so I apologize for that. But I hope you have a great night, have a great day. I will talk to you in the video tomorrow. Take care, everybody.